Good morning, and thank you for joining the Bigtincan Holdings first half FY23 results investor briefing. My name is Jane Morgan, and today I am joined by Bigtincan's CEO and co-founder, David Keane, our Global Financial Controller, Cyril D'Souza, Denise Everson, Head of Marketing Operations and Communications, and Chief Product Officer, Stefan Toulon, who'll be providing you with an overview of today's half-year results release. To ask a question throughout today's presentation, please use the Q&A function at the bottom of your screen. David, I'll pass on to you.
Thank you, Jane. And yes, welcome all to Bigtincan Holdings first half FY23 results call. My name is David Keane, the CEO and co-founder of Bigtincan. As you heard from Jane, joining me here today is Bigtincan's Global Financial Controller, Cyril D'Souza, Denise Everson, our Head of Marketing Operations and Communications, and Bigtincan's Chief Product Officer, Stefan Toulon. For the call today, we'll be using the first half FY23 results deck that was uploaded to the ASX this morning and is also available on our investor website at investor.bigtincan.com. And a recording of this event will be made available on the ASX and on our investor website after the conclusion of the event. Before we begin reviewing the presentation, I thought I might provide some remarks about our progress in this most recent half. So first half FY23 was an important period for Bigtincan as the company grew to achieve a few key milestones. Firstly, passing that $130 million in annualized recurring revenue, showing that the Bigtincan business model is working well. Now, together with that growth, today we'll be announcing a material increase in adjusted EBITDA for the first half, and for the first time, a forecast for adjusted EBITDA for the full year of in excess of $5 million. And we're confirming that the company is on track for its cash flow break-even target in Q4 this financial year. Now, before we go any further, let's talk a bit about the economy. Now, whilst the global economy has presented challenges in first half FY23, particularly impacting smaller companies who are looking to rapidly adjust their spend on a bunch of services, including SaaS offerings. And that has impacted Bigtincan, as you can see from our reduced overall net retention rate. And whilst we did make changes to the team to reduce our operating spend in the half, we continue to believe that sales enablement remains a strategic investment for larger companies. Now, we're going to share some cohort numbers today, particularly on that net retention rate, that show where growth opportunities are strongest. Now, one area of strength for us in this half was our multi-hub business. Now, multi-hub is customers who are buying at least two of our content, learning, and/or engagement hubs. Now, that multi-hub space makes up 29% of total ARR at the end of December. That's an increase from 19% at the end of first half FY22. So multi-hub ARR grew close to 100% in dollar terms year over year to $38 million, showing that multi-hub is starting to gain some scale in itself. And this was driven in part by multi-hub customers spending more than single hub customers, as well as new customers choosing to buy multi-hub. Now, Cyril will talk more about that and how this is benefiting Bigtincan's future. But today, with just 14% of our customers buying the multi-hub solution, this presents an opportunity to take advantage of this by growing that penetration further, as well as winning more initial deals that buy multi-hub. Now, behind all this is the technology we create. And today, Stefan will talk about technological progress in the half. And I hope you're as excited to see it as we are to share that progress. For today, the takeaway is that whilst we need to remain vigilant about a changing macroeconomic market, Bigtincan is well positioned to continue to grow and to build on our platform to create the buying experience of the future for our global customers. All right, let's jump in and take you through today's presentation. So we're going to bring up the slide deck and start on slide 2. So for investors new to the Bigtincan story, this slide is an introduction to our business and our market. If you like, it's a simple one picture of what we do and who we do it for. So Bigtincan is a cloud-based software as a service company that builds a platform to enable customer-facing workers to be more effective in today's more digital and remote economy. We help make virtual and in-person engagements more successful. The products we offer are our cloud-based hubs, our learning hub, our content hub, and our engagement hub. And our differentiators are all about intelligence and experience, including leadership in areas like artificial intelligence, conversational intelligence, and augmented and virtual reality. We integrate with strategic partner technologies from vendors like Salesforce, Apple, and Microsoft. And yes, whilst folks often talk about salespeople as being Bigtincan's users, we have seen that the multi-hub strategy that we'll talk more about today is meaning we are seeing all frontline workers as potential users for Bigtincan's hubs. And we deliver these solutions across vertical markets where we're seeing opportunities for differentiation, and we're touching stakeholders right across the business. If you look to slide 3, I certainly know that empowering sellers to help buyers who are becoming more informed and better prepared than ever before is what our customers are talking to us about all the time. And when Bigtincan went public in 2017, this market was at its infancy. And we look back at where Bigtincan is today. I just want to firstly recognize the work the team has done to create some of these measures of success. With over 400 global experts in the team, Bigtincan leads the market because of this team and the skills they possess to take this progress to the next level. More than 2,000 customer deployments across 60 countries and 100 of the Fortune 500, Bigtincan has made significant progress since that IPO towards building a global leader in our space. But for today, I thought I'd like to talk a bit about some of the awards we've received in first half FY23 that confirm that market position from an independent point of view. Now, yes, details of all these awards are available on bigtincan.com, but I thought I might just read them to you because I think they give you real insight into how we're being regarded. The 2022 Software Reviews Sales Enablement Gold Medalist and Leader, important independent review site. The Stevie Silver Award for Sales and Customer Service, as well as winning the Product of the Year Sammy for Sales and Marketing Technology. And importantly for me, one of the ones that I really treasure for us is the 2022 Aragon Research Innovation Award for Sales Enablement that shows that not only are we building great technology, we're innovating in the market. And these awards certainly should give investors some comfort that this company is gaining the recognition that it needs to help add value to that business over time. Let's jump to slide 4 though and talk about what our focus is today. So today we're going to review the company's highlights, and we'll go through both business and financial highlights. We'll review the company's strategic position in the market. We're going to look at those financial results in more detail, and we'll spend some time talking about that technological progress I think you're going to be really excited to see. And then we'll finish talking about an outlook for FY23 and beyond. So if we jump to slide 5, which is our highlights slide, certainly, highlights in this half include that record ARR number, plus strengthening gross margin and LTV, as well as increasing our adjusted EBITDA. And as I mentioned before, for the first time, we're setting a target for full year FY23, whilst confirming that cash flow break even to be achieved in Q4 FY23. And again, Cyril will provide some more details on these numbers, but I think these give you a bit of a view of the progression in first half. But as much as the numbers show us the progress, the activities behind that are what matters. And if we look at slide 6, let's look at some of those key activities. Certainly first half 23 was a busy period for the team at Bigtincan. That growth we spoke about was supported by more than 50 new logo and more than 300 expansion deals, with new logos coming to Bigtincan, including companies like Pfizer, Align, Jabra, Equifax, and Assurant, all household name customers. An expansion with customers like Google, Cisco, SEMrush, Seek, T-Mobile, and NeoGenomics, among more than 300 customers who expanded, with the average expansion in excess of $30,000 of ARR in the half. Now, later in the year, we announced and completed a $30 million capital raising and completed one deal, the acquisition of Sales Director to lead in AI-driven revenue intelligence for sales enablement, with integration underway now and other opportunities to complete that program on track. We released a bunch of technology, which Stefan will talk about today, which is what this company really excels at. Now, consistent with ASX guidance note 23, the company received ASX approval that future Appendix 4C quarterly report lodgements would no longer be required. So whilst 4C briefings will no longer happen, to be sure that we are communicating regularly with the market, the company started in January issuing a business update and will continue to inform the market of progress. And lastly, in the half, Bigtincan created an independent board committee that has engaged Morgan Stanley Australia as its financial advisor to assist Bigtincan with the management and evaluation of inbound inquiries and expressions of interest regarding potential control transactions. And just to confirm there for everybody, any such inquiries or discussions are preliminary and confidential in nature, and there's no certainty that any transaction will eventuate. But as you'll hear today, Bigtincan remains committed to executing on its strategic plan and maximising shareholder value. And important to say, the Bigtincan board will only progress inquiries that are in the best interests of all shareholders. Okay, let's go to the next slide. I'd like to now ask Denise Iverson, our Head of Marketing, Operations and Communications, to take us through Bigtincan's progression in the market that we operate in, and talk a bit about where some of the long-term trajectory is taking our space and our business. So Denise, welcome, and over to you.
Thank you, David. Hi, everyone. I'm happy to join you today to provide an update on the state of our market and Bigtincan's ongoing leadership role in serving the expanding needs of our customers. The sales enablement platforms market continues to be one of the fastest growing markets in enterprise software. Two pieces of data from this month provide some insight into the market. According to Gartner, sales enablement budgets will increase by 50% by 2027. And according to Precision Reports, the sales enablement market will grow at a compound annual growth rate of 25% through 2028. Our customers tell us that sales enablement is the most critical function for navigating sales teams through the constant change that surrounds them, from economic headwinds to evolving seller roles. As a result, the solutions that Bigtincan provides to our customers are more important than ever, and expectations of measurable sales enablement results are equally high. So it is important for chief sales officers to implement a variety of enablement activities, including coaching, training, content, and engagement tools that deliver quantifiable results, such as those delivered by Bigtincan's Learning, Content, and Engagement Hub. If we move to slide 9, Bigtincan continues to be recognized as a market leader in sales enablement platforms. Once again, Aragon Research named Bigtincan a leader in the rapidly growing sales enablement market for both innovation and performance, noting that we are positioned well for a shift to intelligent sales enablement. In addition to being recognized as leader among our competitors, Bigtincan is the winner of the 2022 Aragon Research Innovation Award. This award identifies providers leveraging a visionary use of technology to not only adapt as markets change, but to actively disrupt and inform how their markets will evolve. As we expect the market to continue to consolidate, the competition will remain strong globally. Bigtincan will continue to lead the way, with a focus on key verticals and geographies where we see the most opportunity for profitable growth. On slide 10, you'll see that while it's nice to receive recognition from the market analysts, nothing matters more to us than our customers. In a study conducted in November of 2022 for Bigtincan by Channel Media and Market Research, a sample of more than 600 enterprise customers were asked how likely they are to recommend a company to a colleague or friend. With a range of +20 to -20, Bigtincan achieved a rating of +18, scoring well ahead of our competition. It's results like this that really make us feel confident about the future of our business. And with that, David, I'll hand it back to you.
Thank you so much, Denise. Really appreciate that. And I think that data really gives us a bit of a view of where we're moving. Okay, now I'd like to ask Cyril D'Souza, our Global Financial Controller, to take us through the detailed financial results. Cyril, over to you.
Thanks, David, and good morning to everyone. Let's start on slide 12. As David mentioned, annualized recurring revenue grew to 130 million at the end of December, representing a 16% period-on-period growth. Of the 10 million of net growth for the first half, this included 2.2 million of ARR from acquired products at the end of December 2022. Moving on to slide 13. This slide shows revenue and gross margin progression over a 4-year period. Revenue in the first half grew 31%, reaching 60.2 million from 45.9 million in the prior corresponding period. On a like-for-like basis, inclusive of Brainshark and other acquisitions, this growth was 15% for the period. Current deferred income increased 27% to 64 million, which gives the company confidence of future revenue generation. First half FY23 gross margin of 88% increased by 2%, driven by efficiency of direct costs and scale of operations. Our infrastructure costs, which are mainly hosting costs, have been controlled, resulting in stable gross margin as depicted by the line graph. Moving to slide 14. For people who have followed Bigtincan, we call this the 4 donut slide, and this is probably one of the key slides in today's presentation. Let me talk you through each of these, starting with the donut on the left-hand side, ARR by vertical. This year, no significant areas of difference to point out, just to note that there remains a nice distribution of ARR per vertical. And we'll talk more about verticals later in today's presentation. Then let's look at revenue by geography. You can see that we continue to see consistent ARR in North America of 88% of revenue contribution and good contributions from EMEA and APAC. Just to note that whilst this is based on invoice location, in terms of deployments, the biggest growth was in Europe, approximately 33% year on year. That's going off a lower base, of course. The third donut is as usual, with high recurring revenue, a typical first half of Bigtincan. And the last donut shows the progression in the multi-hub business that is now at 29% of ARR. Multi-hub is helpful as it leads to stronger retention, larger revenue by customer, and a reduced cost to acquire. Let's turn to slide 15 as we go into more detail. This slide shows why we're so excited about the progression of multi-hub. In the first half, multi-hub grew from 17% of ARR in the previous corresponding period to 29% at the end of the half. That's 100% growth in multi-hub ARR period over period, now contributing 38 million from 19 million 12 months ago. But only 14% of our customers use multi-hub, and that gives us the opportunity to extend that and penetrate into the large base of existing customers as well as new. Some other data here for your multi-hub. Multi-hub customers' average spend was 226,000. That is 109% more than single hub customers, which is 108,000 on average. Overall, this is beneficial to Bigtincan as it leads to lower churn, which we'll report more in the full year, as well as the scale benefits for profitability per customer and access to new sectors of core sales. Let's turn to slide 16 and talk about some of the challenges we faced. In the first half, we continued to see uncertainty in the global economy, impacting how companies think about the future. Bigtincan net retention rate at the end of first half was 105%, down 2% basis points PCP, as we saw the impact of this particularly across our smaller customers. However, when we look at the customers with a larger ARR, we see a different pattern. Customers with over 50,000 annual spend had a 116 NRR, and as David spoke about, multi-customers had an NRR of 120%. Moving to the right, in terms of vertical opportunities, in a spotty economy, we saw the strongest growth in verticals of life science, manufacturing, and retail. So overall, whilst it's important to recognize the impact of the economy, we're also seeing opportunities across our targeted verticals. Let's turn to slide 17 and talk about LTV. Lifetime value continued to grow to 878 million at December 2022, as it approaches 1 billion. This factors in a reduced LTV to CAC of 3.1 compared to PCP, reflecting variable economic conditions impacting new logo wins in the first half. In the first half, we made some cost adjustments as reflected by the severance costs in operating spend focused on marketing and employee costs that we believe will generate an improved LTV to CAC later this financial year. Moving to slide 18. These cost changes we made in the first half are reflected in our adjusted EBITDA as seen on this slide. The company reported a positive adjusted EBITDA of 2.1 million compared to 1.1 12 months ago. This is demonstrating operational efficiency, the synergies realized from the Brainshark acquisition, and the ability for the company to grow, but in a prudent manner. In addition to investors, we note that we had a small reduction in the first half net carrying value of capitalized development costs by just a few basis points, and we expect that reduction to continue in 2023 and beyond. Before I hand back to David, it's worth quickly reviewing two of the highlights that David presented earlier. First, based on some of the operating cost adjustments and the top line position, we are targeting adjusted EBITDA of greater than 5 million for the full year of FY23, and we remain on track to achieve cash flow break even within FY23. Based on seasonality of cash flows, we would expect that to be in Q4 of FY23. Thank you. That's all for me. Back to David.
Thank you, Cyril. So to understand where the technology that powers the business and all those results is going, Stefan Schulon is going to provide a technology update. Steph, over to you.
Thanks, David, and good morning, everyone. Strong technology progress in the half saw the release of key features and enhancements, including our next-gen analytic capability, conversational intelligence released into our engagement hub, our Mac app compatible with the latest M-chip MacBook devices, virtual sales rooms built using advancements in our AR and VR technology, improved multi-hub experience for customers who have deployed more than one hub, Zoom integration, Salesforce.com mobile app capability, and many, many more. Modernization updates across all hubs continue to roll out as we enhance and align the Brainshark and Engagement Hub user experiences with the Bigtincan design standard. The integration program for the small acquisition of SalesDirector.ai is in flight and moving well. We expect this to conclude during the second half. SalesDirector.ai represents a good example of how small acquisitions help us accelerate parts of our technology roadmap while bringing great people to Bigtincan at the same time. The SalesDirector technology adds comprehensive data ingest tools, as well as AI-driven recommendations to our CRM add-in strategy. We plan to deliver additional value to our customers with new buyer relationship and sales process insights right in their Bigtincan CRM app, next to our existing content and learning recommendations. As earlier highlighted, one of Bigtincan's core strengths is taking market-leading software via acquisition, modernizing and aligning it in a cohesive experience with our wider platform modules. A great example shown here is the project started in the first half to update the award-winning presentation creation module in Brainshark. We anticipate the next-gen version to be released to our customers during this second half. Let's hear from a customer, Digi International, who leverages our learning solutions to enable their channel partners.
One of the things that we really value is the capability to adapt, to improvise, to come up with creative solutions. And that's really where I think Brainshark and Bigtincan stand out. My name is Corey Brenner. I'm the Channel Marketing Manager at Digi International.
Digi International is about connecting the world's machines. By connecting the machines to the internet, our customers need a combination of reliability, scalability, security, and easy to manage solutions to solve critical IoT problems. What is critical to our success is that we sell a lot of our services through channel partners. And so making sure not only our end users, but our channel partners are educated on the Digi offerings, have access to technical specifications, and we help them with demand generation.
It comes back to just how do we uniformly and comprehensively deliver content and train our channel partners, our customers, and our own internal people in a way that scales.
We wanted something that would really provide value to the channel and something that was a little more engaging, a little more interactive for everybody.
Started using it internally as well as an onboarding tool for new employees and such too, to bring them up to speed on the offerings.
In terms of the enrollment, we've seen adoption jump nearly 2,000% since inception. And then with quarter over quarter revenue growing 182% with our high value partners.
We've had really good success within our cellular product line, and we're looking to expand that more fully throughout the cellular solutions business unit, but then into other business units as well.
We're looking forward to grow not only alongside our channel and partners, but definitely our friends and collaborators at Brainshark Bigtincan.
Good stuff. Thank you, and back to David.
All right. Well, look, let's look a bit at the outlook. All right. Okay, so post the first half FY23 results, Bigtincan's on track to achieve its guidance for FY23, and that includes, as you heard from Cyril, detail on as well as the ARR number of $137 to $143 million of ARR, and the revenue number of $123 million to $128 million. We've talked today about providing some more detail for investors in terms of the cash flow break-even target and the materially adjusted EBITDA target of 5 million, which again is showing, I think that is giving investors a bit of a view of the confidence of the company to be able to forward predict results and to give more detail in terms of where the company is likely to end up. I think it's also worth saying that the M&A program, as announced in December 2022 capital raising, is on track. We completed the SalesDirector.ai deal, as you heard about from Stefan, and we continue to progress other opportunities. And if and when those close, will impact the market, will advise the market on the impact on guidance at the time of any such closing. So overall, we believe the company has the tool sets and strategies to meet FY23 guidance and set up the business for progression in later years. And talking about progression, we've often been asked about that future progression and to try and give some more insight to investors about where management believes the right way to add value for shareholders is. And I think the slide gives us some talking points there. So first of all, on the left-hand side, we saw today how our market continues to be a fast-growing market in enterprise software. The company continues to maintain its leadership position. We believe that will lead to ongoing organic new logo wins and expansion, and that's adding to our repeatable growth model. We continue to see value-added offerings through organic R&D, assisted by the completion of that small-scale M&A program to add more to our multi-hub model. I think showing today the growth in multi-hub is giving us some confidence in some certainty about how customers view the ability to aggregate their purchasing and get single solutions from vendors. And as we see that multi-hub revenue moving towards 50% of ARR, you heard today that it hit 29%. We're confident that can move towards 50% and beyond. And that's going to help us with retention, as Cyril talked about, as well as increased revenue per customer. And of course, we're doing that whilst maintaining a position whereby this company continues to add to its adjusted EBITDA. And you're seeing that in today's results as we grow those EBITDA margins and that positive cash flow. Well, look, that's it for the event today.